The shock moment, imagine waking up to headlines screaming, "The Aussie dollar skyrockets!" Pause, traders, economists, and everyday people are all buzzing with one question. Why? Here's what happened. The Reserve Bank of Australia, or RBA, stunned markets by holding interest rates steady. Everyone expected another hike, or at least a hint of one. Instead, emphasizing nothing changed. Sounds boring. Pause, not to the markets, because when a central bank surprises, currencies move fast. The Australian dollar didn't just creep higher. It jumped, sending shockwaves through global trading desks. This isn't just about numbers on a chart. It's about confidence. It's about expectations being flipped on their head. And it's about the ripple effect that could touch everything from imports and exports to mortgage payments and investments. For lower tone, think of it like this. You're watching a movie, expecting the villain to strike, then suddenly the hero makes an unexpected move. The whole story changes in an instant. That's what the RBA did. In this video, we'll break down the drama, why the RBA shocked everyone, what it means for the Australian dollar, the winners and losers from this sudden surge, right? And most importantly, what it means for you, your savings, your spending, and your financial future. And pause, buckle up, because this isn't just a market headline. It's a financial turning point. You need to understand why the RBA froze rates. So why did the Reserve Bank of Australia hold rates steady when everyone expected a change? Our pause, the answer lies in a delicate balancing act. The RBA has one main job: keep inflation under control while not crushing economic growth. Inflation in Australia has been stubborn. Food, rent, energy, all higher than people are comfortable with. Normally, that calls for raising rates to cool things down. But here's the twist. The RBA sees warning signs in the economy. Growth is slowing. Household debt is high. Consumer spending is softening. And pause, push rates higher. And they risk tipping the economy into recession. So instead of hiking, they paused. A signal, we'll wait. We'll watch. We'll see how things unfold. I emphasize that pause shocked the markets. Traders bet big on another increase. Instead, they got stability. Think of it like hitting the brakes on a car speeding down a hill. Everyone expected the driver to slam harder. Instead, they eased up. And pause, the decision instantly shifted investor psychology. And when psychology shifts, so does currency. The Aussie dollar's sudden leap wasn't just about math. It was about surprise, confidence, and recalculated expectations. How the dollar skyrocketed, picture a rocket launch. Pause, that's what happened to the Australian dollar when the RBA froze rates. Currencies move on expectations. Traders constantly place bets on what central banks will do. If rates rise, the currency usually strengthens. If rates fall, it weakens. Simple, right? But here's the catch. Markets had priced in a different story. They were bracing for more hikes, or at least strong warnings. When the RBA held steady, traders scrambled to adjust. It's like everyone ran to the same door at once. Buy orders flooded in. The Aussie dollar shot up against the US dollar, the euro, and other major currencies. Our pause emphasized the speed of the jump mattered just as much as the size. Why so fast? Because money moves instantly in global markets. Algorithms, hedge funds, banks, all reacted in milliseconds. The dollar's rise wasn't just a blip. It was a surge, a signal, and a story all rolled into one. For Australians, that stronger dollar has real consequences. Imported goods overseas could be less costly. But exporters, farmers, miners, manufacturers may feel the pinch as their goods become pricier abroad. At lower tone, that's the double-edged sword of a strong currency. It helps some. It hurts others. And it all started with one decision, the RBA holding steady. Winners and losers. Every financial shock creates winners and losers. Pause. Let's break them down. Winners first. Australians planning overseas travel or shopping online from international sites might cheer. A stronger Aussie dollar means more buying power abroad. Importers also benefit. Businesses that rely on bringing in goods from electronics to fuel see costs fall. Now the losers. Exporters face a squeeze. If you're selling wheat, wine, or iron ore, a stronger dollar makes your products more expensive on the global stage. That can dent profits and competitiveness. Then there are investors. Some celebrate as currency markets give them quick profits. Others, caught on the wrong side of the bet, lose big. Pause, and let's not forget ordinary households. While cheaper imports sound nice, the underlying issue, uncertain interest rate policy, can create long-term instability for mortgages, savings, and retirement plans. I emphasize that's the tricky part. A stronger dollar isn't simply good or bad. It's complex. It creates shifts across the economy. Think of it like a seesaw. When one side rises, the other dips. And the RBA is standing in the middle, trying to keep balance while everyone else feels the tilt. What this means for you, let's bring it closer to home. And pause. What does this Aussie dollar shock mean for you? If you're an everyday consumer, you might notice small win, cheaper overseas travel, slightly better deals on imported products. But don't get too comfortable. Currency moves can reverse quickly. For homeowners, the message is more serious. The RBA holding rates doesn't mean your mortgage pain is over. Hey, emphasize, it means uncertainty continues. Rates could still rise later if inflation refuses to cool. For investors, the lesson is clear. Never assume. Markets don't always move in straight lines. Surprises happen, and those who prepare, who diversify, who stay calm, survive the turbulence. And for businesses, it's a test of adaptability. Exporters must adjust strategies. Importers might get a short-term boost. But everyone faces the same challenge, planning for volatility. And pause, lower tone, the truth is none of us control the RBA. None of us control markets, but we do control how we respond. And that's where the power lies. Closing and call to action, so here we are. Pause, a single decision, no rate hikes, and sent the Australian dollar flying. The Reserve Bank of Australia shocked everyone, flipping expectations and forcing traders, businesses, and households to rethink their next move. I emphasize this isn't the end of the story, it's the beginning of a new chapter. Because every decision today shapes what happens tomorrow. In the economy, in our wallets, and in our financial goals, the takeaway: don't just follow headlines. Understand them. Use them as signals to prepare smarter, save better, and invest wisely. And remember, markets are unpredictable, but your habits don't have to be. Build a cushion. Diversify your investments. Stay calm in the noise. That's how financial confidence grows. Hey, pause. Warmer tone, if you found this breakdown helpful, make sure you subscribe for more clear, practical insights. Together, we'll turn complex news into simple, actionable lessons. Our smile and tone, remember. Small steps today create big wins tomorrow. Subscribe for more tips,